Good morning, everyone, and welcome to another Monday and today's edition of The Deep Dive. It's great to welcome you here and welcome you officially to summer. I know that the summer solstice and the official start of summer took place last week on the 21st. Due to the holiday, obviously, we were offline last week, but summer is now officially here. So welcome to it. I know for a lot of us, that means a lot of hot days and summer storms, and depending on what coast you're on, humidity or lack thereof. But in either case, it's great to see you. Glad to have you join us this morning, and glad to chat about the markets and what we're seeing in this summer, which I think by some measure for certain people might be a summer of pleasant surprises. So don't hesitate to let us know where you're from, and if anything, how your day is going. I know for those on the East Coast, it's already 11 a.m. For those on the West Coast, the day is starting, and I hope it is a good start to your day. For us here in Richmond is indeed a summer day, warm. It will be in the 80s today. So fully embracing the sunshine and the heat. So just a handful of seconds to give folks time to sign in and join the platform. And then we will get started with the presentation. I'm taking a look today at what is happening as we are at the mid-year point, what is happening in real estate markets, what's happening with inventory. And now we are officially in the summer season. And given that we are about to close the chapter on June, I thought it would be really timely to do a mid-year update on what we're seeing in housing inventory for this year so far. And so to put that in context, here are the highlights of what I'm looking at today, really at a quick glance. The good news is we're seeing supply improving. Of course, the caveat being it remains below historical trends. However, we are seeing seasonality once again become a factor. And to me, that's the right move towards a much more normal market than the one we've had over the last 2 to 3 years. At the same time, affordability continues as this year's central theme in housing inventory, and it's really what's driving so many buyers as they're looking for their first or next home. So with that, you see some highlights. The number of homes for sale increased about 22% compared to a year ago. Home sellers, however, were less active, and I'll show in some graphs and charts what that means. And that has actually kept the trajectory of the median listing price, right? It's what most buyers see when they head to an open house or a search portal. They see that listing price. You know very well that's really the starting point. Price can go up if you have a hot market and a lot of bidding. Price can go down from there if the market's slower or the house is perhaps not priced appropriately to the market or its condition. And then, importantly, homes are spending longer on the market. That's a positive sign, really, for the health of the market, but they're still moving quite quickly. So with that, let's dive in. Here, what you see in this graph are the number of active listings for really the last roughly 7 years. I marked 2023 in the green bars to your right, and you see there January, February, March, April, and May. And I've also marked Mays of 2021 and 2022. And you can tell we have seen a market improvement in the number of homes for sale compared to these what we've been calling the unicorn year, mostly because these years had an unusual and almost unprecedented combination of factors, from government imposed quarantines to monetary policy that threw money into the economy, fiscal policy that sent paychecks to people, and remote work and sudden concerns over a pandemic, which sent so many people looking for homes. However, when you look to the left of the graph, you see 2017, 18, 19, COVID-19, we're still quite a ways from what I would call a normal market. And here's how Realtor.com called it in their May report. They said basically that the improvement in inventory translated into over 100,000 more homes available during a typical day in May than last year. At the same time, of course, that number remains well below the pre-pandemic period. And to put that into a visual context, here you have May, just the month of May for the last 7 years, and you see what we've been calling the unicorn years, right? Highly unusual for real estate market. We see the improvement from there, but obviously we are not yet at the level we would like to be in a healthier market like the one we saw before those years. Interestingly, and I think this is relevant, and many of you who are in these markets active would be able to confirm this. When we looked at what's happening across the regions, across geographies, you see fairly distinctly in the blue lines, you see comparisons of May inventory to last year, and the red lines are comparisons to the pre-pandemic period. And what you see here clearly, the South region absolutely leads the way in the number of homes actively for sale, and especially compared to a year ago. The Midwest also has seen an improvement, but not as strong, whereas the East and the West regions are still lagging a year ago and pre-pandemic. A lot of this has to do really when you think about what drives, and you know this firsthand being in the market, what drives someone to list their home, particularly a homeowner, is the ability to find the replacement. And for a lot of homeowners with the market so tight on the existing side, what they're looking at for replacement has been new construction. And guess where a lot of activity in new construction has really increased over the last couple of years? The southern states. Absolutely. And in fact, we'll have more insights next week into what we saw, the latest new construction report, which confirms these findings. The South has seen the biggest increase in permits, starts, and completions. And so for a lot of homeowners there are options available when they want to trade their existing home and buy something else. And when I took a look at which metros in the top 200 by size across the country are seeing the most increase in active inventory, that southern flavor absolutely shows. When you look at this, you know, what you see, especially if you look at the state nomenclature, you see Texas, Florida, Tennessee, Arkansas, Louisiana, Alabama, the Carolinas, markets that are small to mid-size. And the key here, these are generally affordable markets with generally solid economies. So the local economies are strong, the job market is doing well, and demand for homes is strong. As a result, there's more churn in inventory, and more people who can find a new home are able to actually turn around and put their home up for sale. So to me, this is a very interesting insight into the markets that we're seeing at the midpoint of 2023. What does stand out at the same time when you look at the inventory, and Realtor.com points this out in the report, the inventory growth rate, right, the pace at which homes are coming on the market, continue to slow for the third month in a row. Why? Fewer potential sellers, and this is across the country, mind you, opted to list their home. And of course, we're also having this statistical event where we're lapping last year's summer activity when we saw a huge influx of transactions and prices were reaching for peak. So a lot of year-over-year comparisons are really getting squeezed until we pass roughly June, July period. But to put that into a visual context, here are active listings, what we've been talking about until now, and new listings side by side. And what you can tell, there's clearly an element of seasonality, right? You see active listings decline during the cold winter months. They ramp up during the spring, peak in the summer, then decline again, and they start ramping up again. That's where I see the good news. We are beginning to see that seasonality return to market. At the same time, the green bars are showing new listings across the country. And there, what you're seeing is a much, much sharper pullback. And I know you've been in the market long enough. You remember last June, July, and then the following 6 months when we saw a combination of peak prices, receding coupled with mortgage rates, which moved from 5% all the way to above 7% in the span of those months, a lot of homeowners at the time worried that A, nobody will be able to afford their home at the current price, and B, they were concerned they were not going to be able to sell for what their neighbor just did, 2-3 weeks prior to that. And so you see this pullback in new listings. However, the silver lining for me, and this is why I like the way this data highlights it, you see the steady improvement since December when new listings hit their bottom. We've seen January, February, March, April, and May steady improvements. It's obvious that as the market shows buyers are still out there, demand is strong, even with rates now hovering between 6 and 7% for 10 months in a row, buyers haven't pulled back, they're back in the market. Homeowners are getting the sense that this market, that's what I said at my opening, is surprising on a good side in many ways. They're realizing that some of their neighbors selling this season are actually not only getting prices similar to last year, but some of them have seen prices even higher, depending again on the market and the neighborhood. And this again was highlighted in the Realtor.com report, showing that new listings declined almost 23% compared to the same time last year, and they remained almost 30% below the pre-pandemic period, 2017, 2019. And what really was insightful in this quote, the pace of new home listings is even lower than May 2020. And I know you are going to remember pretty vividly, May 2020 was only 2 months after March 2020, when the US government, and in fact governments across the world, told people to stay home and effectively ground global economies to a halt. It was a period of real concern, real uncertainty, real worry. So to see homeowners, in a sense, and homeowner sentiment when it comes to listing homes really lower than that challenging period is really an interesting insight. And my view is, I'm hoping that what we're seeing in the market and the education that we can together provide homeowners, provide buyers about how the market this year is really improving, would drive a lot of that narrative forward and help a lot of people understand that decisions they may be sitting on uncertain do not need to be quite as worrisome or dire as headlines might have predicted over the last several months. So when I look at new listings, I like to see how they compare with prior years. And you see here, new listings for 2023 through May, the dark blue line, compared to the prior 6 years. You can tell in the orange line that noticeable dip, that was the quarantine period in 2020. And you can tell compared to the last in the context of the last 7 years, we're still well below trend with new listings, and we clearly need more inventory and I think confidence for a lot of homeowners in today's market. And again, looking at the May through the lens of the unicorn year period, you can tell we're still below the prior 6 years. So there's quite a bit of room for improvement in this picture going forward. And so again, I wanted to look metro by metro, and I ranked the top metros for greatest increase in new listings out of the top 200. And what I found was a real surprise. When I look at the top 20, only 3 of those, Sioux Falls, Brownsville in Texas, and Lubbock, have actually seen year-over-year growth in new listings. Most of the other markets are still lagging last year. And that's quite telling. It really speaks to the market conditions. And I think, again, homeowner sentiment and confidence in market dynamics. And if I were to sum that up in one picture, what this really tells you, out of the top 200 largest metros in the country, 98.5 of them saw new listings decrease this May compared to last May. So obviously there's still a lot of hesitation in the market for a lot of people looking to bring their houses on a portal. So with the dynamic of supply being what it is, what we're seeing in prices, we're seeing prices begin to normalize. And I'll show you what I mean by that, and also reflect market dynamics. And maybe this is one of the key positive developments for both buyers in some ways, but especially sellers. And what you see here are, again, listing prices. And I'm showing these to you mostly because these are the prices that I know the clients you talk to generally tend to see whenever they begin their home search process, right? Whether they go to a portal like Realtor.com, whether they see a listing from you directly from an MLS, these are the prices that they encounter. This is the experience of the market. And what you see here is you see listing prices saw a moderation in the last half of 2022, but then they began to pick up as buyers returned to market, as supply remained constrained. And so at roughly 441,400 in May, prices are not far off from the June peak. You see that in the orange bar of 449,000, a clear indication that the market, in a sense, is reflecting much more normal seasonal patterns, right? Activity and prices tend to pick up during spring and summer months as larger homes come to market, as a lot more people bring homes or look for homes during the warmer months. Prices tend to reflect that. And in fact, I wanted to get a sense, are prices beginning to show more seasonal trends? So I looked all the way back to January 2017 in Realtor.com's database. And what you see here clearly is very much that seasonality at play. As I mentioned, you see the spring-summer upward wave, followed by a slightly downward after a crest curve, and again followed by a rising, declining, rising, declining, on a general upward trend. You see where we were last year at the peak of the market. You see where we were May of this year. And so for listing prices, there's a clear seasonality, and there's a clear reflection of market dynamics that play between supply and demand. And once again, looking at metros, which metros are actually seeing the strongest increase year over year in list prices? What you see here, by and large, with a few exceptions, are metros that highlight the theme for this year, which is search for affordability. Buyers this year, more than, even more so than probably the last 2 to 3 years, as prices were rising, are searching for affordability because those mortgage rates they're having to contend with are channeling this process. So you see markets like Champaign in Illinois, Columbus in Georgia, Davenport, Iowa, Topeka, Kansas, Tulsa, Oklahoma, Knoxville, Tennessee, all markets which compared to the national tend to be more affordable. And even expensive markets, when you look at Santa Maria, Santa Barbara in California, or the Connecticut markets of Bridgeport, Stamford, or Norwich, or even a market for those of you up in New England, like Lebanon, New Hampshire, on the border with Vermont. Even though these markets may be more expensive than the national median, what they highlight is a relative affordability to neighboring metropolitan areas. On the West Coast, you see the spillover effect from the Bay Area. For Connecticut, there's a clear spillover effect from Manhattan and New York City, especially with remote and hybrid work still being part of the jobs landscape. And even for Lebanon, New Hampshire, what you're seeing a spillover effect from some of the hotter markets in the state farther south, like Manchester, Concord, which have seen a huge influx of folks from Boston, New York. And so a lot of people priced out of those markets are moving farther north. So clearly, when you look at the metro level, you see how important local market dynamics are. And this is where you play such a critical role, right? This is where your expertise, market knowledge are so important. You're able to share with buyers, with homeowners, what's happening specifically in your market and move beyond the national headlines and be able to highlight what the market is doing this year. So in terms of time on market, you can tell typical homes spend about 43 days on market in May, 2 weeks longer than last year, but still a little over a week less than pre-pandemic. So it's still a pretty tight market. And visually, you can tell this right away. 2023's number compared to 22, 2021, and also going back farther in time. Obviously, homes that are coming well priced on the market are still moving quite quickly. And this, again, looking at this picture through the lens of the unicorn years, you can tell that even compared to those, there's been an improvement, but we still have a ways to go to fully get the market back to health or a more normal balance. And so what can we expect for the remainder of the year, right? The next half? I thought that Lawrence Yun at NAR captured this quite well when he said inventory will remain tight in the coming months and possibly, in his view, even for the next couple of years. Some homeowners are unwilling to trade up or trade down after locking in historically low mortgage rates. And I would say that it goes beyond homeowners being unwilling. In reality, and you know this, you talk to your neighbors, you talk to your friends, you know the reality on the ground. For many of them, it's not a willingness, it's the fact that financially they can't make the math work. At the same time, there are certainly people who have life events, life stages, circumstances changing, and who need or want to make a change. And many times they're sitting on the fence, mostly because they're not sure what's happening in the market. And this is where this type of information and insights can really play an important role in helping them make a more confident decision and moving forward with their plans. So to kind of put this into a capsule, what are the main takeaways? Number one, midpoint of 2023, we're seeing the return of seasonality to markets. From my perspective, that's incredibly good news. It means we're on a road towards normalization. It might take us a while to get there, but after a couple of years of anything but normal markets, this is good news. Inventory is growing. That's good for buyers. Listing prices are rebounding. That's also good for homeowners who want to sell. So home buyers are benefiting, and home seller confidence with a lot of this information should improve and help market transactions. So what should you keep an eye on this week? A lot of data is coming out this week for markets, for the economy. We're keeping a close eye. I want you to have a heads up. We'll keep you on top of this. So we're going to have the Case-Shiller home price index come out tomorrow. We're going to see what the latest data show. We're going to have new home sales, and this is an important indicator, particularly in this year's market: consumer confidence, pending home sales, and personal consumption expenditure index, the PCE. What is this? For some of you who might wonder, why do we track this? This, along with the consumer price index, or the CPI, are the two main inflation measures, and the PCE particularly is the one that the Federal Reserve tracks when they try to decide whether monetary policy is having an impact on inflation. So the numbers from this month's PCE index will tell us a lot about what the Fed is likely to do at its next meeting, whether it's going to raise rates or stay the course, skipping another rate raise like they did this month. So lots of information. We'll keep you in the know. Also, something to keep on your radar. At the same time, to add to your calendar, tomorrow we're going to have a live member webinar. For those of you who are signed up, I'm glad to know you are. For those of you who have time tomorrow between roughly 2 p.m. Eastern time or 11 a.m. out on the West Coast, we're going to have Sarah and Jessica from our learning and development team, joined by Alex, our product manager, to talk about local markets and a lot of the improvements we are currently making to make you the expert in your local market and help you in your conversations with clients, especially in the summer season and particularly the critical next half of the year. So if you have time, sign up and join us for this really lively presentation and conversation. So with that, I thank you for your attention and I welcome any questions. So Jessica, let me know.
Hi, George. I have not seen any questions related to your presentation come through just yet. We did just get a question from Dennis, who asked when was part 1 presented of the webinar we're having tomorrow. And that was actually a webinar that we held in December. If you're a KCM member, you can watch the replay right in your training center. And I did post the link to register for tomorrow's event for KCM members. That's right in the chat. But George, I haven't seen any other questions come through for you. So I think we're all good there.
Fantastic. Thank you, Jessica. And thank you all of you for joining us today. I wish you a successful and productive week, and we'll see you next Monday.